Okay, so we're doing the 2021 Sole Trader, and we're going to try to keep it roughly about 15 minutes or less if we can. So this is the question. As you can see, I've marked it all out. You can pause the video and look to see where everything goes. This is what I do at the start of every single question. And if I have a look down, then I'm going to start working one straight away. Okay. So it says stock on the 31st of the 12th was €72,100. The figure includes damaged stock, which is cost plus cost of €12,400. So I'm going to take that out of 12,400 in my stock. Just keep an eye out here that it says this figure. All right, there's a pre-paper that says that during the year. So just make sure that you know that on this date, this figure includes this amount. So I need to take that out because it's cost price, and I'm going to add it back in net realizable value, which is just 25% of that figure. And that's all I'm going to do. So €72,000 is going to be my 31st to the 12th closing stock figure. And I just have it all laid out here just so it kind of makes the video smaller. Okay, so €72,100. And what I'm going to do is I'm going to take off the damaged goods of 12,400. Okay, so 72,100, take off the 12,400, and I'm going to add back the net realizable value, which is just 12,400 multiplied by 25%. And if I do that, I should come out with a figure to the value of €3,100. Okay, so that's what it's worth now. That's what I'm going to add it back at. Okay, if I throw all that into the calculator, I should come out with a figure. So 72,100 minus 12,400 plus 3,100, and I get 62,800. €62,800. That goes to the trading account, and it also goes as a current asset. Okay, 62,800. So that, just to clarify, that's the only figure that goes to two places, 62,800, like so. And that's my first working done. That's exactly where it's going to go. Closing stock, and it goes to both places. I'm ready to look at working number two. And working number two in this case is goods were sent to a customer on a sale or return basis. So that ultimately indicates that because it's sent to a customer, and sale or return means they're now being returned. So I sold them, which means I'm now getting the goods back. Okay. So the three accounts that are going to be affected are going to be sales, because I no longer have the sale, they're giving me the good back. Debtors, I no longer have the debtor because they're giving me the good back. And I now have the stock. Okay, so I've done sales and debtors first. The reason I've done sales and debtors first is because that's the double entry. Okay, so the trial balance figure for sales is 1,797,300. 1,797,300. That's on the credit. And the trial balance figure for debtors is going to be 97,300, 97,300. So 97,300. So the important thing to note here, because I'm going to be given two prices basically. So if I go back to the question here, you can see that it was the credit sale of €28,000. So that's the price. The selling price is what I sold it to my sales. So I need to take it out at selling price. I would have sold it to my debtors at selling price, so that's the figure that needs to come out. So it's because the selling price is 28,000, that's the figure that I need to, that's what it was originally entered in the books as, so that's what I need to take it out at. Okay, so 28,000 is coming out of both those items there, and that's the double entry. It comes out of sales, so it goes on the debit side. It comes out of debtors, so it goes on the credit side. And that's basically my first entry done. What I can do is I'll just tot up those questions there. So my total for sales is going to be 1,769,300. That goes to the trading account. 1,769,300. And debtors, if I total that up, I get €69,300, and that goes as a current asset in the balance sheet. So CA, and that goes 69,300. So as you can tell, that's the double entry sorted. But if you look up here, I would have specifically outlined that there's three accounts affected, because I now have closing stock as well as that double entry there. So remember, I would have stated up here that closing stock is the only figure that goes to two places. So just to clarify, that's the first double entry, and the second double entry is I now have the stock. So what I'm going to do is I'm going to go up here, and because I have another working on stock, that figure is now invalid, and I'm going to bring it down at what it's currently at, which is going to be €62,800, so 62,800. And I now want to find the value of the closing stock that I have. Remember, stock or any asset is always recorded at cost price. So if I know that my selling price is €28,000, well then that's no good to me, because I need to find the cost price. Now in the question they tell us that it's cost plus 25%, so you can see it there, cost, markup on cost of 25%. So this figure currently represents 100%, which is cost, and 25%. So I'm going to divide it by 125, and I'm going to multiply it by 100, and that'll give me the cost price, CP, just the cost price. And the cost price in this case is going to be €22,400, 22,400, and that's the figure that I'm going to add back onto my closing stock. Okay, so 22,400 gets added back on, and just to show you, okay, it'll go on the debit side. How come it doesn't need a double entry? It doesn't need a double entry because this figure, whatever the total amount is, if I total it up there, it's 85,200, so 85,200. That figure is going to go to the trading account T, and it goes as a current asset in the balance sheet also. Okay, 85,200, 85,200, like so. And as you can see, I scribbled out both those because I brought down my original figure here. A lot of kids, what they'll do is they'll just do everything up here in the closing stock, okay, and leave it opened, but you just don't know when it's going to be reopened. By forcing yourself to think about where it goes while you're doing the working, it's the best practice because you're ultimately getting that layout of the profit and loss in the balance sheet into your skull every time you do any working. Okay, and that's working 2 done. And I'll take over to working 3. Now working 3 is a very, very familiar working. Okay, it's just the depreciation one, annual rate of depreciation, which is 20%. So because I bought a new van of 67 and I sold an old van of 42, the first working I'm going to do there is vehicles cost. That's the first one there. Okay, so the trial balance figure for that, so coming from the trial balance, the delivery van's cost is 380,000. As I just said, the new vehicle was 67 and the old vehicle was costing me, let me just double check that figure there now so we get it up, and it was 42,000. Okay, so 42,000. Throw it into the calculator and I get 405,000. So 380 plus 67 minus 42. That 405 is your new fixed asset, so it's going to go in here. That's why I normally start with that, because it's normally job done. And again, if you put that straight in, you'll get your 3 marks. Okay, so because the working is technically depreciation working, like we can see here, all right, they give us the rate of depreciation, which is 20%. I need to find the depreciation for the year we're doing the account. The year we're doing the account for is at the bottom, 2020. Okay, so I need to find out the depreciation for this year. So on the 31st of the 3rd, a lot of kids, they might make the mistake of taking this date. Take no notice of that date for the minute and only focus on the first date here. On the 31st of the 3rd, 2020, I bought a new van. So I had I sold an old van. So I had the old van for 3 months this year. And then on the same day, I bought a new van, and the new van was 67, and I had that for the remaining 9 months. Okay, so the remaining 9 months. So the first thing I'm going to do is I'm going to do that calculation first. So this is my format. The old cost was 42,000 euros. The new cost was 67. Okay, and I'm just going to do both those to start with, and if I get the rate of depreciation on both those, which in this case is going to be 20% coming from the working 3, okay, I'm just going to divide that by 12 and I'm going to multiply it by 3 because I had the old vehicle up until the 31st of the 3rd, and that gives me 2,100 euros. And on the same day I bought a new vehicle, so I had the new vehicle for the remaining 9 months, and that will give me 10,050. Okay, so that's the first step, old, new. Now the existing is basically, if we think about it, if I've only depreciated 2 of the vehicles for this year, well then obviously if my total down here is 405, well then obviously there's other vehicles apart from just those 2. So how I get the existing figure is I take the 380 and I simply minus the old vehicle. So 380 minus the 42 will give me the rest of the vehicles that have yet to be depreciated. And in this case, the rest of the vehicles that have yet to be depreciated is 338,000 euros. Just to clarify, it was the trial balance figure minus my old vehicle that gave me the 338, and I'm simply going to get 20% of that. I had those for the whole year, so that's fine, and I get 67,600 euros, and I'm going to add those together and I get 79,750. That's my depreciation figure for this year, being 2020. Throw it in there on the debit side, 79,750. That simply goes into my profit and loss account as a selling and distribution expense, 79,750. Okay, accumulated depreciation, right? So first things first, always start with the cost, handiest one. Then you have to do your depreciation expense because it has to be added to your accumulated. All right, now normally with accumulated depreciation, as you can see here, there's always a trial balance figure. Kids sometimes get confused. This is the net book value, this is the cost. The difference between the cost and the net book value has to be my depreciation. So 90,000 minus 795,000, well that's simply just going to give me 105. So my trial balance figure in this case for my accumulated depreciation is going to be, oh I think I got that calculator wrong now, sorry 1 second. So if I go back up, So I did the buildings, apologies. Okay, so it's 380 minus the 310, and that's the 70. Okay, so still cost minus net book value, and that'll give me the 70,000 euros. That's my opening amount there. So in my T account, 70,000 over here, I'm simply going to add on this year's depreciation, okay, which in this case is going to be 79,750. Okay, so that's all I did there, 79,750. Now, included in this 70,000, just to clarify, that's a 7, not a 9, okay? Included in that 70,000 is depreciation on the old vehicle that I've actually sold. So I need to take away the disposed asset depreciation. So how I'm going to do it is, and this is what I recommend you do, the two dates are important here. So the first date is the 30th of the 9th, 2016. So I would simply write down 30th of the 9th, 16. That was the day I bought it. The day I sold it was the 31st of the 3rd, 2020. 16, 17, 18, 19, and 20. Okay, and I sold it on the 31st of the 3rd. So how many months do I have for in 2016? Well, if I bought it in September, I only had for October, November, December. So 3. I had it for 12 in that year, 12 in 2018, 12 in 2019, and I sold it in 2020 for 3 months. 12 is 36, 36 and 6, 42. That's the magic number, 42 months. So when I go down to find the old depreciation, it's going to be the old asset cost, which is just as we know from above here, 42,000 euros, 42,000, multiplied by the rate of depreciation in this case, which is 20%. And I divide that by 12, and I'm going to multiply it by the magic number, which in this case is 42. So I multiply it by 42, I throw it into the calculator, and I should come out a figure with the value of 29,400 euros, so 29,400. That's the depreciation on the vehicle that I no longer have, so hence I'm going to take it away. 29,400, and if I throw it into the calculator, I should come out with a figure to the value of 120,350. 120,350. That's my accumulated depreciation. Where does it go? So it's going to, again, just to make it, left hand column is profit and loss, right hand column is balance sheet, and that's going to go in as a minus fixed asset section of the balance sheet. And it's going to go 120,350. Okay. Now, when we sell a vehicle, all right, so we've done the cost, we've done the depreciation expense for this year, we've done all the accumulated depreciation, and I just need a couple of double entries. So just to show you, that 29,400 will go on the debit side of the T account, and that needs a double entry, okay? So the figures that need a double entry so far are going to be the 29,400, and it's going to be the vehicle that I sold, okay? So the 42. So that's where the original figures are coming from. So the 42,000 was the vehicle that I sold, so I need to see, did I make a profit on that vehicle? Okay, so 42,000, and again the depreciation is coming from the above question, and I'm simply going to take that away, 29,400 euros. So this is what the best option that I've learned. So if I take away the 29,400 euros, if I throw it into the calculator there, so 42,000 minus 29,400, I get a figure, or what I call the net book value. So cost minus depreciation gives me what it's worth now, and that's 12,600 euros. So that's what it's worth at this minute. If I go back up to the question, we can see that I always receive an allowance in these questions, and the allowance is 11,000 euros. So the allowance is what I've received. So if I received it, okay, it'll let me see if I made a profit or a loss. So if it was worth 12,600 and I received 11,000 euros for it, well then I have to have made a loss, and the loss in this case is going to be 1,600 euros. To show you in a T account, that 11,000 would simply go here. And if you're just like T accounts, the debit side is bigger, obviously it's 42,000 in comparison to the 40,400 euros on this side, which means it has to be an expense. Okay, what type of expense? A selling and distribution expense, and it goes to the profit and loss of 1,600. All right, the last figure, the last working that we need to do in response to that is the net amount for the transaction was entered in the bank account but was incorrectly treated as purchase of trading stock. So the net amount means the physical transaction, okay? So the physical transaction of cash. So the first thing I'm going to do is I'm going to get the purchase figure from the trial balance, and the purchase figure from the trial balance is 1105, okay? 1105,000, 1105,000. Now, included in that is the net amount of the transaction. So just to show you, okay, the net amount, which is basically the physical transaction of cash. So if the new vehicle was going to cost me 67, but I received 11,000 euros, well then the net transaction has to be the 56. It's the difference between what I paid and what I received for the other one. So the net amount refers to the physical transaction of cash, and the physical transaction of cash in this case was 56. So they had entered the purchase of the asset in the purchase of stock. So a vehicle is not stock, so it cannot be included in purchases, so I need to take it out. And if I take that away from that, I should be left with a figure to the value of, it's do it there. 1105,000 minus 56,000, and I get 1049,000. So 1049,000, and that's going to go to the trading account over here. So P&LT, that's what that column stands for, profit and loss and balance sheet, and it goes to the trading account 1049,000 like so. And I'm ready to move on to the next item, which is, and I should have I'm going to stop it there. That's the first 3 workings done. That's the first part of this video clip.